So in this video, I want to explain why if you're a retail trader, the chances are you're probably trading a contract or a product rather that is actually hurting your P&L. And you'll probably be, looking at all different trading styles and different indicators and tools and wondering, why am I struggling? And it could well be the product you're using, the platform you're using that's actually hurting you. So I want to explain why that's the case and, what is the best product for retail traders to trade. This again is a topic I covered in a bit more depth in my newsletter. I'll put a link to that in the description as well, so you can go and have a more thorough read. The reality is in many countries, particularly in Europe, Asia, the most common form of product for new traders coming in will be either CFDs or FX. Now, CFDs are banned in the US, but FX markets and FX platforms I think are quite popular. Certainly Europe and Asia, FX and CFD platforms are extremely popular. And I want to explain a little bit firstly about why they bring people in, but also explain what the downfalls and why really, if you want to be a successful day trader, and this is aimed at day trading, why you should not be using those platforms. So firstly, the FX and CFD industries are extremely good at marketing. They spend a lot of money on it and bringing new traders into trading. And so this is one reason why they're so popular. They spend a lot more on marketing than, for example, the futures industry does, particularly to retail traders. So they bring lots of people in. Now, there are various reasons why they have to bring a lot of new people in. And one of them is because they have a very, very high failure rate. So when you have a client base which is constantly struggling, you need to do a lot of advertising to bring new people in. Now, one of the things that they'll tell you about is, for example, fee-free or commission-free. And this excites and intrigues, and retail traders like this. They don't like paying commissions. So the idea of a commission-free platform, they really like that idea, and on they come. This is a little bit of a concern, and this is, to me, again, separates retail traders from pros. Pros don't mind paying commissions, and they realize that in order to reduce commissions, what you do is you seek a high frequency form of trading. And this is another topic of mine that I've discussed before. The issue with commission free is there's a few things. Now, firstly, it's been shown, in some countries in particular, that CFD firms, for example, get people in on the commission-free platform and then sort of try to move them over to one where they are paying some commissions. The other point is you have to look at the spreads that they make, the bid-offer spreads, when they're making a price to you. And if you're paying no commissions, but the spread is wider, well, then that is a form of commission. So if you look at futures markets, for example, you traditionally on, let's say, the ES will always get a one-tick spread. Now, one tick in that is $12.50 in the ES. What you have to look at is what spread are you getting when you're trading commissions. That's one thing to look at. And if the spread is wider, then you are paying for it. Okay, it's not commission free. There are lots of other things that people don't understand about these sorts of platforms compared to futures. What I'm going to do is explain a little bit about why futures, are a far more transparent product for you. FX firms will tell you, for example, that the FX market is $1 trillion market, okay, and that's a great reason why you should be trading FX. Now, I find it quite laughable because the average retail trader has an account size of $5,000 to $10,000, okay? So why does it matter to them if it's $1 trillion market or a $1 billion market, okay? You're not trading that big size, so really the size of the market is irrelevant to you. The other point to make, of course, is though, that's the size of the whole FX market. That's not the liquidity of the platform you're using. The reality is the platform you're using has a liquidity that's a fraction of that size. So you're not trading into $1 trillion market. You're trading into whatever the liquidity is of the platform that you're using. And so, that may or may not be a high or, a high amount. You don't know. And this comes into another point is what information can you see on the platform? The platforms, when you get these free platforms, they look pretty good, right, to a novice trader. But there's so much information you don't see. You're not seeing, what's trading at every moment in terms of what size is trading on every bid and offer. what size of the order book. Often you don't see that. There's so much information that is not available to you compared to futures markets. And this is significant. As a day trader, frankly, I couldn't trade on any of the CFD or FX platforms. There is so much vital information for me, how the market is trading, how each price is trading, and the different volumes and sizes and all those sorts of things. I don't see that information on most of those platforms. And remember, even if your platform is showing you some of that information, it's only showing you what's happening on that platform, not in the wider market. And that's huge. That's huge information. With futures markets, where all the trades go through an exchange, when I look at my futures trading platform and I see what's trading and the volumes on the bid, the volumes on the offer, I see the whole market, and everybody in the world sees the same information from the same market. If you're trading, FX on one platform, the liquidity and volumes you see, even if you do see them, are going to be different from someone trading on a different platform. So you're not really able to see what the whole market's doing. You're seeing just a small snapshot, if indeed you are able to see that information. This is huge. And as I say, I could never even think about day trading on these platforms. Another really important point is, who are you trading against? When you trade on those platforms, you are always trading against the platform provider, okay? And that is always putting you at a disadvantage. When I trade into a futures exchange, I'm trading against the other traders. There's no middleman in between me that takes my trades and decides whether or not they want to take the trade. When I trade into a futures market, I can trade against other retail traders. That again is huge. I want to try and trade against traders that are weaker than me. I don't want to always have to trade against the market maker or the platform provider. It's a significant area of weakness for you. And that leads into, how are you filled? Where are you filled? And you have to ask yourself the question, if I said this to you, if we took just a random price, let's say the market is 15 bid, 16 offered, doesn't matter about the big figure, 15, 16. If I wanted to buy at 15, I put a 15 bid in, so I join the bid. In the futures markets, I can get filled on that 15 bid, whilst the market is still 15 bid, 16 offered. On your FX or CFD platform, more often than not, you will not be filled until that market goes 15 offered. Okay, so you're only going to get filled when the market goes against you. Okay, and that's because if I was a market maker on those platforms, which, I used to be a market maker, sadly I never traded against retail traders as when I had to trade against pros. But what you would do if you were the platform provider is if you had a bunch of clients wanting to buy at 15, they were on the 15 bid, you would join the 15 bid. If you got filled there, you would try and sell 16s and make your own profit, okay? And only if the market went down and went through 15s would you then fill all your clients and say, yeah, you've got them all at 15, okay? So you can see how it goes. The way you get filled is more often than not, you're going to get filled only when the underlying market has gone against you somehow. Whereas in the futures market, that's not the case. These are just some of the disadvantages of trading on those platforms. There are many. And I detail more of them in the newsletter, so please click on the description, on the link in the description to see more about this. It's a topic I'm passionate about because so many retail traders are drawn into the industry by CFDs and FX, often promising them lots of riches, which isn't for most people going to be the case. This is a tough business and most people will struggle. But I think one of the reasons why they struggle is they're trading the wrong product. Futures markets are far more transparent. The information that you see is far greater. It's a much fairer market for everybody to trade than those other platforms. And it's perhaps the fact that it's the market you're trading that's hurting your P&L as well. Tying in with this, why people think they can just trade, FX or any product, of course, is that most people when they come into the industry are using some form of technical analysis. And technical analysts will tell them that you can trade any market with their analysis. And that also is incorrect, but that feeds into the sort of platforms as well. And often you'll find that technical analysis educators are pushing you towards CFD and FX platforms as well, and that's another topic in itself. But futures markets far more transparent, far fairer. And in the interest of transparency, I should add that the Norden Method website is sponsored by Eurex. I will say that, but I'm a passionate advocate for futures markets and a passionate believer that they are a more fair and transparent market for you to trade. So I hope this has opened your eyes to something that you may not have thought about before. As I say, hit the newsletter because there's a lot more than even I've discussed here.